There are 2,423 properties scheduled to be auctioned this week. That's up 19% when compared to the same week last year. New South Wales will hold about 900 auctions, with about 700 in Sydney. Victoria will hold about 1,000 auctions, with most of them in Melbourne. Queensland will hold 250 auctions, with roughly 160 in Brisbane. South Australia will hold about 150 auctions, with most of them in Adelaide. Western Australia, the NT and Tasmania will hold 22 auctions between them, and the ACT will hold 93 auctions. Take a look at the most viewed properties going to auction this weekend. And in New South Wales, it's 221 Walls Creek Road East, Goobarrangandra. This was our feature property just a few weeks ago. In Victoria, it's 158 Willesden Road, Hughesdale. This four-bedder has an asking price of about $1 million. Queensland, the top property is 3 Lamandra Court, Indooroopilly. This five-bedder has 4 bathrooms and a pool. Top property in South Australia, 72 Arthur Street, Unley. This 3-bedder sandstone cottage has a lovely renovation. And the top property in Western Australia is 3 Inglis Court, Kingsley. This 3-bedder has lots of potential. And the most viewed property on the REA Group website this week is 12 Lancel Road, Toorak in Melbourne. This is a giant grand mansion, first built in 1916. It sits on a 3,300 square metre estate with landscape gardens and a huge driveway. The house has 5 bedrooms, 5 bathrooms, and is so large it's split into several different wings. The home has lots of wood panelling inside on the walls and a huge kitchen and giant living areas. Outside, there's also a large entertaining areas and a big pool. Price guide for this is about $28 million. And for more on property, I caught up with Angus Moore from REA Group just a little bit earlier.
Obviously, January's pretty quiet. Not a lot of properties on market through December. And so, it's not a lot of auctions through January, but that's starting to ramp up now. And we'll continue to do so as we head in towards Easter. Easter's quite early this year as well. So we'll probably see a bit of, compression of activity. That said, it is looking a lot busier than what we were seeing this time last year. The number of scheduled auctions for this weekend's up just shy of 20% compared to what we were seeing last year. So certainly much stronger conditions than we were seing early last year.
Well, how about clearance rates? How are they holding up?
Seen pretty solid clearance rates thus far. Again, obviously we've been on lighter volumes over the past few weeks, so don't necessarily want to read too much into it, but at least thus far looking pretty solid. Sydney and Melbourne have been sort of mid to high 60s even on some weekends, which is pretty solid and certainly better than we were seeing through much of last year.
Yeah, it looks like there's a lot of stock, a lot of listings out in the Sydney and Melbourne markets, but some of the other capital cities still a little quiet.
That's right. Sydney and Melbourne have had pretty strong starts to the year, actually. We saw the number of new listings in January, which is still a quieter month. It's nothing like, say, spring or, the peak of the autumn selling season. But Sydney and Melbourne had their busiest start to the year in over a decade. In Sydney, It was since 2011, in Melbourne since 2008. So hit the ground running this year. Brisbane, Adelaide, Perth, they've been quiet for much of the last 18 months. They're still continuing to be pretty quiet. They're up a little bit compared to where they were last year in Brisbane and Adelaide, but still pretty quiet conditions.
Yeah, obviously, you mentioned Easter, that's at the end of March. So obviously there's a bunch of public holidays around then. So you'd imagine auctions take a break and then they pick up again pretty quickly after that, or is it a gradual increase again?
We tend to see slightly quieter conditions through after we get past Easter into winter. The fact that Easter's so early this year, it'd be interesting to see whether there is a bit more activity in that sort of late autumn into early winter than we might normally see. But it does tend to quiet off post-Easter and then ramp back up as we get towards spring.
Now, we've got a chart we can put up on the screen about stamp duty. Now, just talk us through what we're seeing here.
Yeah, so this is some joint research that we've done with the E61 Institute looking at the impact of stamp duty and how it's changed. And I think this chart is kind of a pretty stunning one, which shows the cost of stamp duty today for a buyer on the far right versus a buyer, say, in the mid-1980s relative to income. And the kind of takeaway here is that a buyer in, say, Melbourne is paying more than 6 times as much stamp duty as a buyer was a generation ago. In Sydney, it's 5.5 times. So it's not like this is just a Melbourne story. We're seeing it right across the country.
Wow, and I know New South Wales has some different rules now whether you can choose to pay land tax or stamp duty. Is that having any overall impact on property sales here?
Yeah, it's a great question. Certainly those sorts of reforms that can start to ease the burden of stamp duty, will help first home buyers. That policy in New South Wales has been repealed. The current government committed to repealing it, changing instead the first home buyer concession that's available and raising the thresholds there. I think where we are seeing some of those reforms is in the ACT. They're on a 20-year program to remove stamp duty, slowly replace it with land tax. And we're only halfway through, so we're kind of yet to see the full impact of that. But it shows that these reforms can happen.
we've had a bunch of profit results this week. Some of the big banks like CBA, their economist still thinks we're going to see 3 cash rate cuts before the end of this year. What would that do to property if that was to happen?
Yeah, it's certainly going to be the key question later in the year. I think I'm maybe not quite that optimistic that we'll see 3, but it's certainly a possibility, and really, all comes down to what happens with inflation. If we were to see rate cuts later this year, and particularly if we were to see as many as 3, that's obviously going to be a tailwind for home prices. Our expectation is we're not going to see very strong growth this year. We'll probably still see growth, but not very strong. And the reason for that is just how strained affordability is at the moment. Mortgage costs have increased a lot, incomes haven't kept up. And so if we were to see rates cut, that's going to ease that affordability a bit. It's obviously not going to unwind the enormous increase in mortgage costs we've seen over the past 2 years, though.
Angus Moore from REA Group, thanks so much for your time today.
Pleasure. Thank you for having me, Ed.